Hey there, pro traders, and welcome to another Monday market review with yours truly, Ian Giffen, on behalf of the GoPro Trading Academy and, of course, the Convex Trader. We're going to be doing something slightly different today, so do hang around to the end where I'm going to drop down to the lower time frame here on the Euro USD. In fact, when I say lower time frame, I mean all the way down to the 1 minute chart and show you how I was able to generate a lot of success in the early years of trading as a fund manager using lower time frames. So do hang around to the end for that. And of course, if you are watching this on YouTube, please make sure you subscribe to the channel and hit the notifications bell. We're bringing out professional training on trading on a regular basis. And also, if you are in our Facebook page, the Convex Trader, please make sure that you jump into the comments there and let me know what you think of the review today. If you've got any thoughts on the market as well, or any of the instruments that you're trading, please be sure to pop them into the comments there as well. All right, so looking just briefly as well then at last week, I'd say that the theme for last week really was predominantly around the yen weakness, and also then quite a lot of retracement across the US dollar pairs. In fact, here on the weekly time frame, you can see that for 3 weeks now we've had a retracement, and we discussed this in fact exactly a week ago, where we saw that the market came back testing this resistance level up here, which is the bottom of the weekly HTC channel. It is also the area of the daily 55 EMA, which, as many of you know, is a key dynamic support and resistance level, which is one of the reasons why we do look at it as well. In any case, what's interesting about the 55 EMA is that it very often represents the area at which a retracement wave in a higher time frame trend comes to an end. So in this case, the retracement wave is on the weekly time frame trend, and here on the daily, you can see how it has, at least for the meantime, come to an end in the area of the daily 55 EMA. And in fact, last week as well, in fact, on Friday, you can see how it came back to retest that area. And even today, as we're going to look at a little bit later, even right down to the very lower time frames, it's found resistance there. All right, so that's the euro for us. We are looking for this to roll over. We did see an initial rollover last week. What didn't happen, of course, is we did not get a bearish impulse wave, in other words, a close below that preceding low. That just adds a little bit of additional caution. If we're going to get an aggressive rollover here, typically we have a phase one reversal. That hasn't happened yet, which means that there is more likelihood of a resumption in bullish cyclicity, or at least a ranging market for quite some time. But we're hoping for some really aggressive market movement to start this week, especially now that we've got non-farm payroll for the month behind us. All right, similar picture on the cable, a little bit more aggressive, obviously, on the weekly time frame. You can see how that trend is a tad stronger than what we were looking at on the euro, but also that retracement wave having come to an end. Didn't even get as far as the 55 EMA, which is fine. But once again, we're looking for this also to give us a rollover, potentially, which would mean the resumption of that bearish trend on the weekly time frame. All right, so next up is one of the most important instruments that we trade, which is the dollar yen. And here you can see how, in this case over here, the yen weakness drove this weekly candle, which obviously being a bullish impulse candle, is pushed the market all the way back up towards this prior resistance level. We're obviously waiting to see if the market can push through that during the course of this week. For those folks who are looking to trade hybrid strategies, then really just looking for a single pullback here and a bullish resumption on that. Now, this is an example of where we did get a phase one followed by a phase one. Obviously, this is the mirror image of what we were looking at on the euro. But rather than not giving us an impulse wave, we actually did get an impulse wave with that close at the end of Wednesday above that previous wave high. So looking for an aggressive reversal here with an inverted head and shoulders, and then obviously a bullish resumption. Let's wait and see what happens. There is potential, obviously, for not only ongoing yen weakness, but a resumption in dollar strength, which would obviously drive that quite aggressively. So dollar Swiss, again, here we can see how for the last 3 weeks, we've seen dollar weakness against the Swiss franc in this bearish retracement on the weekly time frame, and then just dropping down to the daily. What we can see here is a breakdown in that bearish cyclicity. Admittedly, it was just because we got a single bullish engulfing candle on Friday. This could continue in a bearish direction today and fail to ring that low, which means that we would just need to backtrack on that that analysis just a little bit. So we're waiting to see again if potentially we've got this bullish resumption over here and the start of the next impulse wave on that weekly trend. Right, so next up, USD Cad. This is one of the messier pairs. Obviously now on the weekly time frame, we're very much inside of the HTC channel. We spoke about this some time ago as to the failure to break out of that channel. But since then, it's come down fairly aggressively with 3 impulse candles in a row. It's still quite deep inside of the channel, even on the daily time frame. But we did get a class 1 M pattern over here. And I know that many of you folks do like to trade that, which means that, well, for the last 2 weeks, in fact, there has been some potential to trade this on the lower time frames, but it's been a little bit messy. USD Cad hasn't really done much for us at all. Looking at the Aussie, we were again looking to see if we were going to get a class 1 M pattern here on the weekly time frame. That didn't happen with the close inside of our XA leg in this W pattern. So it's actually a class 4 W pattern now, but in any case, we were looking for that potential resumption in bearish direction, but quite the opposite happened. And we are still very much in a bullish W pattern here, as we have been pretty much for the last 2 weeks now, although it looks like that today we might get that higher ringed. Let's wait and see what happens there. And that, once again, might mean that we are seeing that resumption in USD strength. Kiwi, similar kind of picture, just a little bit more weakness on the New Zealand dollar as opposed to the Aussie. What this has done, though, especially with last week's spinning top over here, is shown that this resistance level of the HTC channel on the weekly time frame is in fact holding. So let's wait and see if that continues. You'll notice that once again, here's that 55 EMA. And in fact, Friday's candle came up and the wick just penetrated that before rolling over and coming back down again. So once again, let's see if this bullish trend on daily time frame representing that phase 2 retracement wave on weekly has come to an end. It may well have, in which case we will be looking for that bearish resumption of the weekly trend. Right, moving to our yen crosses. Here you can see how that yen weakness pushed the euro yen to just outside the weekly HTC channel, meaning that we've officially got a breakout on this. So this is definitely tradable for those of you who are looking to trade the daily impulse. We do need to get a valid pullback and all those final criteria met as well. So you can't just jump into it right now. But what is interesting about this, of course, is that through the course of last week, we had 5 impulse candles in a row. As I mentioned in our weekly wrap up on Saturday, it's like 5 soldiers just marching down the road. So there we have it. Let's see what happens today and tomorrow. We do need to get that pullback and a continual close outside of that weekly HTC channel for us to be able to trade the daily impulse on this. But we are well outside the HTC, of course, here on the daily time frame, and have been since certainly since the close on Wednesday. So I know several of you were trading this on the H4 impulse, and there were some nice trades there. Well, there were some nice trades across all of these yen pairs, in fact. So let's just have a look at Gbp yen. I know some of you are still in a trade here. We discussed last week how we've seen the resumption in the bullish pattern over here with a class 1 W pattern. And as soon as that low was ringed, I know that many of you started looking on the execution timeframes for trade. So we've certainly had plenty of opportunity for that. As I say, I know that some of you did jump into that. This was enough for you. I think many of you don't mind having a class 3 W pattern, and those of you who are more aggressive and took that trade are definitely capitalizing on that on the daily time frame. Left it alone, obviously, for H4 impulse because we are still inside of the HTC channel here. But again, the whole of last week really was just a continued movement up towards the top of that HTC channel. More aggressive is the Swiss yen, as you can see. We're not quite as successful as the Euro yen. So not quite breaking out above that preceding resistance level, but still a strong bullish impulse candle here on the weekly time frame. We discussed the entry for the daily impulse. Now, if you're using advanced targeting, you are still very much in this trade. We spoke about that entry a week ago, so it's still ongoing. Using our 2-5-step rule, you're still very much in this, and a very nice trade there that I know that many of you jumped all over. So again, for H4 impulse, because of our HTC channel over here, not something that we've necessarily taken. Here's CAD yen, where you can see that this is probably the strongest of the lot with that bullish breakout. Will break above and close above that preceding wave high. And here on the daily time frame, you can see we had the breakout of the daily HTC channel as well. Those of you who are trading the hybrid obviously noticed that we discussed this a week ago as well, how there was a breakdown in that bearish cyclicity, break above that dynamic resistance level being the trend line. We haven't had any kind of a pullback. Wouldn't be surprised if we do get a pullback back to this price level, representing the top of the HTC channel on the daily time frame. So very tradable again. For those of you who have jumped all over that, I know that's been profitable for you. Right, Aussie Yen, similar picture. We discussed how that little wick over there broke the cyclicity down on weekly inside the HTC channel. Not much to do there, but again, here on the daily time frame, you can see we did get a breakout. That was Thursday's close. Obviously not doing anything since then with the non-farm payroll, firmly in our sights on Friday. But we can certainly look to go again from today and the rest of the week. This is already giving us a valid pullback. So certainly this is stacking up for a potential for us to go long on that, and certainly on the lower time frames as well. Right, last of the yen crosses, Kiwi yen, and again you can see how this one it showed weakness, as we know, with the pullback and our BC wave closing inside the HTC channel. We did get that breakout a week ago, as you know, and we've got another bullish impulse candle here as well. So I know that many of you are trading this one as well, being outside of that. But looking for an opportunity on the daily time frame, we didn't get a pullback. And of course, if you wanted to trade on the lower time frames, we are inside that channel. We didn't even have a valid W pattern either. So not quite as busy on those two. All right, so let's move on to the rest of the instruments. Obviously, these are the ones where we stay away from these generally for trading the intraday time frames. The yen crosses and the majors and the minors are enough for us on that. Euro GBP, I'm still not touching this at all. Last week was quite a strong bullish candle, but it's not an impulse candle. Still inside HTC here on the weekly time frame, and likewise here on daily as well. You can see that this is just not worth looking at, and quite frankly the same for Euro Swiss. I won't even waste your time on that. Euro Cad, where we discussed a week ago that we've had a breakdown and that bearish cyclicity, we've also stayed away from. We did have a bearish impulse candle, but even here on the daily time frame, you can see that that's just inside HTC. That's just a ranging market, and our core strategies focus on trending markets. Euro Aussie, likewise, not interested. Moving on to the last of the Euro crosses, where you could see again on Euro NZD last week was just an inside bar on the weekly time frame. And here on the daily time frame, very much stuck inside the channel. In fact, a very narrow consolidation area, not something that we are interested in at all. Right, so on GBP Swiss, we did have the bearish breakout on the weekly time frame last week. You can see, even though we are very much the start of this week, just today it's pulled all the way back to the what was support and now can be treated as a potential resistance level. Hold on one sec while I sort this out. So GBP Swiss, really not interested in that either. As you can see throughout the course of last week, the only thing we could say is it tested the bottom of the HTC channel. Right, so the rest of the GBP crosses you can see here on, well, let's just have a look at the weekly first on GBP Cad, where we had that very strong bearish impulse candle, really because of Canadian dollar strength, but also to an extent because of the GBP weakness. So those two combined, giving us quite a strong bearish resumption on this weekly trend over here. So that's definitely interesting. And of course, here on the daily time frame, Friday managed to close outside of that HTC channel. So we want to see what happens as the market comes back and retests what was support and can now be treated as resistance. And that is happening right now as we speak. Obviously, we would like to get a continuation of this. Already prepared to trade this in a bearish direction using H4 impulse, obviously, and we don't really go into lower time frames with these at all either. GBP Aussie, let's just go to weekly first. There you can see that we are still in this. Technically, it's a trend, but as far as I'm concerned, we've had a failed test of the support level already, so not something I'm interested in there. But there you can see the GBP weakness, and in this case Aussie strength, which is another feature actually of what happened last week, bringing it down to the lower part of the HTC channel. But the fact is it remains inside of the channel. Right, so last of the GBP crosses is against the Kiwi. Here you can see on the weekly time frame that's of no interest to us at all, and likewise on daily. So moving rapidly on to the last of our general crosses. CAD Swiss, first of all, on a weekly. This one obviously giving us an indication of a bullish resumption in this trend on the weekly time frame with that strong bullish candle, showing us again that Canadian dollar strength, in this case against the Swiss franc, rigging that low as well. So this is what's nice about this, is it's also a class 1W pattern. So it ticks a number of boxes with that outside C close. We've already had the pullback on this, and in fact this morning was your opportunity to go long using daily impulse on this. So pullback over Friday gave us a ring low with an impulse candle, all set to go first thing this morning, which I'm sure many of you have already done. Right, Aussie Swiss, this one not so much, even though it was a bullish impulse candle. Here on the weekly time frame, you can see it. We've got this flag pattern, I guess, with the flagpole, but really that's just quite a narrow consolidation area that's very visible here on the daily time frame as well. So staying away from that. Aussie Cad retracement away from the support level on the weekly HTC last week, just giving us really a kind of a spinning top over there. So no real activity worth paying attention to at all. And we'll just be able to take this consolidation area across to the right until we get a breakout. Final Aussie cross, Aussie Kiwi. Here you can see again Aussie strength versus the New Zealand dollar. We've still got a trend over here, albeit a weak one, of course, with the retracement closing back inside not only the XA leg but the HTC channel. So that is true. So if you require an outside C close, you won't be able to trade this, or a valid class 1W pattern. But if you're happy for the fact that we closed outside the HTC channel here, then you may well be looking for a pullback and the resumption giving you a daily impulse entry. You can see how we've actually seen that bearish cyclicity breakdown. We've got an aggressive reversal, phase one. So pullback plus resumption, that is definitely something that you can look at. As long as you don't require that higher time frame outside C close. Right, let's look at the last two of our currency pairs here on Kiwi Swiss. Really nothing. Look at that weekly candle. In fact, we've had a whole sequence of weekly candles that provide no interest to us at all. But even more visibly here on the daily time frame, that really is quite a tight consolidation area. But a little bit more action again with the Kiwi Cad and that Canadian dollar strength. Now, obviously, you don't want to overcommit when it comes to an individual currency, but this is a strong trend. It is a valid class 1M pattern with that high being ringed. And last week, giving us a nice strong, and I think it was just an impulse candle, or bearish impulse candle. So although we are still inside the HTC channel here, I know that many of you would already have been looking for your resumption and potentially shorted this market first thing this morning. I'm not sure if we actually got an impulse candle there. What is that? 902 versus low 904. It was marginally, but nevertheless, it was an impulse candle. If you haven't shorted this yet, in fact, price is still at or about that same price level. Right, so that's the currency markets. Let's just have a quick look at gold, where you can see for another week, nothing has happened. And here we are looking at the Dow. Likewise, very quiet. It's been, we know that the week before was a good week. This is still overall very bearish, though. We did come back inside the weekly HTC channel, but it's still a potential class 1M pattern or a strong class 4W. And even more so here on the S&P, and obviously my favorite, which is actually the Nasdaq, where we are in fact outside of the HTC channel. It's tested that resistance level last week, rolled over, giving us a small bearish candle, but it's a potential start. Let's see what happens. We don't yet have a breakdown in this bullish cyclicity, so potentially looking for that with a bearish resumption. If I'm going to short any of these indices, it's going to be the Nasdaq. Certainly not going long at this stage. Oil obviously broke out of that consolidation area. We'll see that more visibly on the daily time frame, giving us another bullish impulse candle last week. So price of oil, there's no mercy there for anyone who's energy hungry. And here you can see where we did have that bullish breakout. It came back, respected the top of the HTC channel as a support level, even though we got a bit of a gap over there between Wednesday and Thursday open. But the closes are all outside of that channel, and Thursday and Friday obviously giving us that bullish resumption. So this is still looking bullish. If you are trading oil, then certainly you'd be looking to trade this on the lower time frames at this point in time, maybe using something like the H4 impulse strategy. Right, Bitcoin, the last we're going to look at, really still for 3 weeks in a row, nothing has been happening there. I'm waiting for a bit of a buy signal, technically speaking, but both across the weekly and daily time frames, you can see there's nothing at this point in time. Still respecting what is relatively tight consolidation area. But if we do get a breakout, a bullish breakout on this, well, potentially both trading like this, but also in terms of buying actual Bitcoin, I'll be back in the market. Right, so Euro US dollar, just coming back to, as promised, to talk about the lower time frames. This is something obviously that we are teaching now during the week on our in our live Discord trading room. It's something that I know a lot of people want to be able to do, to trade the lower time frames. One of the assets that I've developed over the years was an understanding of how to trade between the dynamic support resistance levels offered by the 55 EMAs, and had a custom indicator developed for that. Many of you have already got that. If you don't and would like a copy of the MT4 indicator, then please make sure you pop into the Forex Trader Facebook page and send us a message. You're also welcome to look through all our posts there. There's plenty for you to learn. But if I just go straight to the 1 minute time frame over here, and we'll notice that we've actually been consolidating now since about an hour ago. But what was interesting is that through the course of the morning, as we saw the market continue to come up to retest the resistance level, as we discussed earlier, which includes the daily 55 EMA. And here you can see on the 1 minute time frame how close it's actually got to that. But on the way, it was bouncing along on the 1 minute 55 EMA until eventually it broke through, got down to the 5 minute, broke through, and now you can see that it is actually finding resistance in this confluence of dynamic resistance being 15 minute and 30 minute 55 EMAs. It has found support on the 1 hour 55. I am very bearish on this overall. Not that I'm trying to predict the market at all, you know my opinion on that, but certainly I think that this is likely to go a lot further. This may well be the turning point that we have been waiting for. remember, if we just go back to, I'll look at the 4-hour time frame, actually, we had that trend line break, that dynamic support level where the market got pinched into this triangle over here. It had a false breakout last week and then bailed, giving us a bearish impulse wave again and again. And now if you're an Elliottian as well, you'll understand that this is a potential, or this is a wave 2 at the start of a potential wave 3. And as all Elliottians know, wave 3 on average is the longest and strongest. So going to 5-minute time frame as well, you can see how we had the bounce off of it there. It's certainly looking very bearish as far as I'm concerned, but let's keep an eye on that. And we don't jump to any conclusions. We wait for the market to prove itself. All right, folks, so that's pretty much it from me. I hope you have enjoyed our session today, and that you've gotten value out of this. Once again, if you're not subscribed to the YouTube channel, please make sure that you do that and hit that notifications bell. And if you don't follow us on Facebook, please make sure that you jump into the Forex Trader Facebook page, follow us and like us, because we are doing daily training, sometimes small training, sometimes big. But already I've had several folks say to me that they've had some really important aha moments from the conversations that we're having there. So one final point on that, in fact, is if you want to qualify, firstly, for a seat in our live daily trading room, where we go into all of these techniques in a lot more detail, and certainly will be this week, then please engage in those conversations. That is how you qualify. You need to actually be engaging in conversation with us, even if it's just to give us a wave or say hi, or else give your opinion. Happy to chat about it. And then, of course, the other thing we've got coming up, which I'm going to announce more formally in the next week or so, is our birthday bash, represented by an intensive workshop on price action, technical analysis, and trading. That will be coming up early in July to help us celebrate our 3rd year as a training academy. And you are potentially able to get a free access to that and a free ticket to the VIP room as well, if you are engaging in our Facebook page. So come and join us there, join in the conversation. We'd like to get to know you better, and also to understand your challenges in trading better. But certainly we'd love to be able to help you on that journey. There's certainly a good community of successful traders there that can help you with that. All right, folks, so that's it from me for the Monday market review. If you're watching this as a recording, also please just pop into the comments below. Let us know that you watched it, and let me know if you've got any questions. I answer them all. All right, folks, have a fantastic week's trading. I'll chat to you all soon. Bye for now.